Okay.
I'll put record on this computer recording. Hey, well, I'm with Mark Driscoll. Mark is a community leader here in Fort Collins and former president of First National Bank. So, Mark, welcome to our Financial Management for Nonprofit Organization courses. This week, we are in the midst of talking about financial analysis. Next week, we're going to be talking about cash management, banking relationships, and so forth like that. So, hey, why don't you just begin by sharing a little bit about your, background here in the community and with nonprofits.
Okay. Well, thanks, Ken. It's great to be with you. I came to Fort Collins almost 50 years ago now to attend Colorado State University. Grew up in Southeast Colorado, got 2 degrees from the business school at CSU, bachelor's and master's degree. I thought that for about 4 or 5 years, I wanted to be a football coach and did that, and then had the chance to get into the banking business and started at the ground, from the ground up, as find somebody who doesn't bank here and bring them in. That was a sales job, and eventually got into commercial lending, business to business banking services, and then ultimately into administration and being with the bank for nearly 40 years, and had a wonderful career. Watched the Northern Colorado region grow almost exponentially. I mean, we've experienced wonderful growth. So incredible place to be a banker and be in the banking business. As part of my job at the bank really is, and particularly the leading bank, the largest bank in the region, we were heavily involved in community affairs and community activities, and was encouraged from really the first day of work to find those nonprofits where, one, in my case, I could go and network and meet people, and 2, make a difference, be a good representative for the bank with nonprofits. And then as I, over time, found various nonprofits that I was interested in, and served on boards and fundraising campaigns. I have to say, Ken, I'd have to really take a long time to think back over 40 years on how many nonprofit boards I've been on in this region, but many, I suppose at least 20, I suppose on various positions, and had an opportunity to chair a few boards and absolutely learned so much. One of the best things, 2 or 3 really the best things about being involved with nonprofits as a volunteer is, one, you're helping with the mission. I mean, at the end of the day, beginning and the end of the day, what's the mission of the nonprofit organization? What are they trying to do? Who are they trying to help? What's the need? What's the gap that's being filled? And secondly, the very, very interesting people you get to meet. I just can't think about how much, I couldn't really quantify how much I learned from the people that I served with on these various nonprofit boards. People would ask all kinds of great questions that I never thought of. And as I learned in the banking business over the years, there's very, very many ways for a for-profit business to make money. And there's lots of ways people can be successful or fail in business. And it's the same thing in the nonprofit world, that there are many, many great ideas. There's a lot of need to try to help and support. And there are well-run nonprofits, and there are those that aren't so well-run, and everything in between. And I just was so grateful to have had so much experience learning. I remember one of the first boards I was ever on was the Salvation Army, local Salvation Army board.
All right.
And it very much, of course, was a primary mission was ministry and spreading the gospel, but it was also to help people. Salvation Army had a retail store. They had a feeding program at the time. There were all kinds of outreach to help people. It was actually pretty complex organization. I think back at how much I learned from that. So anyway, lots of experience in being involved with nonprofits that I look back in. I got a lot more out of it than I ever put in. I really feel that way.
Well, that's neat. And we actually have one of our students actually has a long history with the Salvation Army. And so he's been
Okay,
sharing some
wonderful.
insights with us. It's been very interesting to hear his perspective and learn more about the operations and workings of the Salvation Army. You know, Mark, right now you're involved with, let me see, the Larimer County Food Bank on the board there.
Yes.
You're the board chair for the Community Foundation. And then I know you're involved in like a private foundation. Those are
Yes,
three
yeah.
very interesting segments of the nonprofit sector. And so you have a great, you know, besides the depth of your experience and the years of your experience, great breadth in terms of the different types of nonprofit organizations that you've been involved in. Is how would you, you know, characterize just some of those different, you know, entities and the purposes they serve and how their particular missions are expressed through their activities?
Well, so for the two of the one's a private foundation, and basically the three advisors, there's an X amount of money, and we get a chance to figure out how to give it away. That's a pretty good job. The food bank for Larimer County, of course, the mission is to, you know, eliminate hunger and to support those who are food insecure. The organization goes back clear to the early 1980s. In fact, I had the blessing of serving on the first board for the food bank for Larimer County way back when it was very small and in its infancy, and then to see how much that organization has grown and the number of people served is remarkable. So, but food bank has a basic mission. Is how do we get food to people who need it? And the modalities, the varying modalities that does it, with people coming to the food bank, and now being a drive-through, given COVID-19, it's a drive-through operation that the team has organized, and then versus people who get their food from a food truck, who get their food from various places, from senior centers to the schools to through the Boys and Girls Club. It's remarkable, the outreach, the number of people that are touched. But really, the food bank is extremely well run. It's been very interesting. I've not been on the board, but just a year. I'm just so impressed with how well managed it is. The food bank here is part of a larger organization known as Feeding America, which, you know, it really is good for nonprofits, if possible, to have a connection with a national organization. There's just so many support mechanisms there. So anyway, that's a very basic need. Versus, say, the Community Foundation, which really has two pieces of it. One is to provide services to donors and philanthropists, encourage philanthropy, to encourage people to donate to charities of their choice, to educate people about philanthropy, provide varying vehicles for people to take some of their wealth and share it with those, with nonprofits that they have. And the other big piece of the Community Foundation is it's a convening community leadership role. And that has evolved over time with many community foundations, where, you know, the best way to support, have a good community is have a strong community. And I always said in the banking business, we always talked about the fact that if we're going to have a good bank, if we have a good community, if the community's strong, the bank will be strong. It's just how it goes. Well, if the community's strong, we're going to have fewer people struggling. We're going to have higher quality, higher standard, higher quality of life. And so I really like the futuristic sort of approach that the Community Foundation here in Northern Colorado takes, and many community foundations around the country are the same. So it's interesting. It's interesting board work. There's and the people that run these organizations are very impressive and very entrepreneurial in their approach.
Yeah, no, that's great. That's great. Well, Mark, we've been discussing this week in our class. This is week 3 of just a 5-week class, and so this is really like a quick skimming, like a speedboat skimming the top of the lake almost. use that analogy because each of the topics that we deal with, and some of them do end up being separate courses, but just an opportunity to do some introduction. And this week, we've been talking about financial ratios, reading financial statements, very basic in terms of the types of financial statements. It's interesting, nomenclature varies a little bit with nonprofits. Instead of a profit and loss statement, we talk about maybe a statement of activities. Instead of a balance sheet, we might talk about a statement of fund balance or financial
net assets,
position, and but with that, with that being the case, and we talk about budgeting as well, and I like when I mentioned to you about this topic, you said, well, you put it simply, spend less than you take in. That's good advice for personal finances as well as business finances, and especially nonprofit finances. I guess the question I have is, you're on a private foundation that does make grants. You've been involved in the community foundation. You look at financial statements of nonprofits you serve on the board for. From your perspective, when you look at a financial statement, what are some of the things that stand out to you? Just the very first things you either look for or that you believe are important?
Well, in all the years that I've been involved with the banking business, there's the old joke about bankers. All they ever do is go to the bottom line, down to the bottom, and see what happens. If they're making money, lend them money. Well, it's needless to say, there's a lot more to it than that. And so from my perspective, the first thing I look at is the balance sheet. And the balance sheet is the statement of assets and liabilities, and then how much of the organization's own money is available to support the operations of the nonprofit. So which would be the net assets, or in a private company, that would be the equity, the shareholders or the owner's equity. And in a nonprofit, it's the net assets. What's available, and many people would call it capital. And I really believe that that's capital. And there's two things really that capital does for an organization. Again, capital would be assets listed at book value minus the liabilities at their current balance, ends up being net assets or capital. And capital does two things. It provides support for the organization when they want to grow, and it enables the organization to survive during the bad times. So in the good times, you need capital to be able to grow. You got to have some extra money to support growth. And in the bad times, you need extra money to cover the losses or cover challenges that may happen. So really the first thing that I would always look at is an organization's balance sheet. And there are current assets and current liabilities. There's non-current assets and long-term liabilities typically. That's sort of the four chunks of the balance sheet. I mean, if you look at JP Morgan Chase, you say, oh, look at that complex balance sheet. Still assets and liabilities, and they're called what they are. So the balance sheet can tell you an awful lot. It can tell you the liquidity of the business. It can tell you the general strength of the business. Is it a sustainable business? I mean, if it's got a negative net worth or a negative net assets, you got more liabilities than assets. This organization is probably not long for the world. It's not going to make it. So the real key, I think, to look at is the current position or the current ratio. That tells you the liquidity. What kind of cash is available to cover current expenses? A business doesn't go out of business really until it runs out of cash. I mean, that when a business runs out of cash and has no access to cash, it's over. Now, they may have all kinds of assets, all kinds of inventory, all kinds of receivables that may be coming in or fixed assets. But if the business has no cash, sooner or later, and can't sell assets either quickly enough or to cover the loans, then the business going out of business. I've always believed in a principle. It's a biblical principle of surety, and this applies probably more to personal finances than it does to corporate, but not really. I've always believed that the principal surety says that no entity, individual or a business, should have debts that cannot readily, in any type of market environment, in any sort of valuation of assets, even in low, cannot cover its debts by the sale of its assets. And so even if it's a quick sale, so from a personal standpoint, I've always said you should never have debts that aren't absolutely adequately secured by assets that can be sold at any time to cover those debts. So for personal finance, of course, then the biggest violation of that in these days is credit card debt, because credit card debt is not secured by assets. It's secured by future income usually. And if people have too much credit card debt and all of a sudden they lose their job, they can't pay their bills. Well, same thing with a business. If a business has more debt, either trade payables or unsecured debt that is not adequately, in the worst case situation, secured by assets that can be sold, then that business is at risk, and there's too much risk. It might be okay in good times, but in tough times, and we've seen this right now in this time of COVID, businesses that were weak have gone out of business in a hurry and filed bankruptcy in a hurry because the bad economy accelerated. So I look at the balance sheet. Then once you understand the balance sheet and the financial position on a given day to what that company looks like, or this nonprofit in this case, then you go to the income statement and say, okay, what's the source of income? What kind of expenses do they have? And does the business, as we talked about, does the business have some kind of earnings, some kind of profit? It's really important to have profit. And even in a nonprofit, it's called a nonprofit, but really there's a nonprofit because it doesn't pay taxes. But a nonprofit, just as a for-profit business, has to have excess cash flow over all of its liabilities, excess profit. Profit, the way an accountant might recognize profit, they always teach you how to, okay, let's back in and find what's really the cash flow of this business. Because again, cash is king.
Yeah.
Cash pays the bills. Cash enables you to grow, or you got to have some liquidity in the business. So the operating statement actually is second. And then to begin to understand the makeup first of the assets, if you go back to the balance sheet, Ken, how are those assets valued? Is it realistic? Sometimes the assets are booked at a certain amount, $100, but the real market value, what they can be sold for at some point, you convert an asset to cash, might be a lot less. Well, are they high quality assets? Are they junk assets? What are they really worth? The terms of all the liabilities. But then in the income statement, the number one thing that I like to look at is how does the organization recognize its income? If it's on a cash basis, many nonprofits are on a cash basis. You recognize income when the money comes in. When you put a deposit in the checking account, there's income. But many businesses are on accrual accounting, and accrual accounting basically recognizes income when it's earned, not when it's paid, but when it's earned, when it's services delivered. Again, not as many nonprofits. Some are on an accrual basis. They provide services that they're going to get paid for later. Okay, yeah, we'll accrue for that. But so it's really one of the clear understandings that I always would is how does the organization recognize its income? Because then expenses are what they are. Those, expenses, you get charged a bill, you got to pay it. But how that income is recognized is crucial to really understanding the viability of the business and if it's going to be sustainable going forward.
Yeah. No, that's good. And you mentioned the cash is king. I was thinking about that when you were sharing about the strength of a balance sheet, reliability of income, the consistency of income, things of that nature. In our course, we have talked about the roles and responsibilities of board members. So since you've been on numerous nonprofit boards, over the years, how would you summarize the responsibility of board members when it comes to budgeting, finances, evaluating the financial condition of the business, financial, any involvement in financial projections or plannings? strategic planning, things of that nature?
I think first of all, the board members need to pay attention. I'm sure there are many people who are volunteers. Virtually all nonprofit, the board members are volunteers, meaning they're giving their own time. They just want to help. They have a passion for the mission, perhaps, or they want to meet people, or whatever the reason is that the individual board members got on the board. The real key is you have to say this is important, because ultimately the board is responsible. Now, again, with nonprofits, there's depending on the nature and the charter of the nonprofit, there's a fiduciary responsibility. In other words, the board members ultimately have that final responsibility to make sure that the organization is viable. But number one thing for the board members is don't glaze over. Pay attention to the numbers. Pay attention to what's being presented. And one of the other things a board member can figure out pretty quickly is, does management, leadership of the actual paid leadership, do they know what they're doing? Because if the leadership or management of the organization doesn't understand, somebody doesn't understand the financial information, well, how is management ever going to know where they really stand? Again, the financial service a report card of a point in time. It goes back and it reports trending. What are the trends over the last periods of time, and then really how that foundation of what the financials are telling us today, how is that a good basis for the future? Because at some point, today's the day, and you got to look out into a year or 2 years down the road and do some kind of financial projections, financial modeling, budgeting, those kind of tools to say, how do we keep this organization viable? So for a board member, it's important, one, just pay attention, care, and if you don't understand them, ask questions. Ask the management questions. And then if management can't answer the questions, that's a big oops. Gee, maybe we better have somebody in this organization that can help us. Now, some nonprofits are small and can't afford to have a chief financial officer and maybe even not a controller. So the executive director perhaps is doing a lot of that work and wearing a lot of hats. And the executive director might be really good at delivering the service that the mission of the nonprofit is all about, but they might not have the time or the expertise or the background to understand the financials. So then at some point, maybe it's a board member that needs to help in a small nonprofit. Somebody needs to be able to understand how the money's coming in and where the money's going. And what are therefore then the risks of survival, or the risks of if something changes in the economy or whatever, how risky is the survival of the organization?
Yeah. Some years ago, Mark, and our class has been exposed to the ECFA, the Evangelical Council of Financial Accountability. And I actually had the opportunity to have a personal conversation some years ago with a gentleman who was serving as the executive director, for that group. And in asking him some questions about nonprofit issues, nonprofits that failed, got into trouble, his response was, in most of those cases, Ken, the board members were asleep at the switch. I think those were his words. They just weren't paying close enough attention.
Yeah.
And so there is an important responsibility, and I guess then it goes to the importance of selecting, board members who will take that responsibility, serious, and to carry out those duties, even when it means asking some difficult questions. Mark, let me ask you a real quick question about budgeting. I know in the textbook that we have for this course, they were advocating for, figure out your revenue side first and then move to expenses. And it seems like in my experience, in most nonprofits, they kind of do the opposite. Can you just, talk a little bit about just, when you approach, the budgeting process, what makes the most sense and why?
And you know, Ken, there's probably an earlier step when it comes to budgeting and it's back to whatever the mission of the organization is. Okay, we have a mission. And every year the executive leadership and the board should spend some time looking at the vision, mission, purpose. Okay, what are we trying to do? And number one, there's going to be a number one thing we're trying to do. If you're part of the food bank for Larimer County, you're trying to eliminate food insecurity. You're trying to make sure people who need food can get it. Okay, well then what do we need to do that? So often you take a picture of the vision and paint that very clearly. Well, here's at a minimum what we need to do. Well then, okay, how much is it going to cost us to do that? So you start with, okay, what's the basic mission going to cost us? I mean, how many people do we need and all of this? And of course, as organizations get established, they have an infrastructure already and they're, the old flywheel concept of Jim Collins is once the flywheel gets going, then the organization's got momentum and certain things are just going to get done, and it's part of the organization, the fabric of it. But really, there's a plan. What's the plan? And then, okay, what's it going to cost us for the plan? Okay, now the next step is, now how are we going to fund this plan? And in a nonprofit situation, of course, different organizations have different sources of revenue, but it's likely most of it's donations. Okay, where are we going to go to get our donors? And then if there are some fee-based services that can be charged, where government provides some support perhaps for some of the services, or there's, maybe there's foundations that really focus in on the mission of this particular nonprofit. But I always like to think that, okay, what are we trying to do and what's it going to cost us at a minimum? And then what do we have to have, what's nice to have, and what's really a dream? And if you look at those three things, say, okay, well, how are we going to fund this? Now, some of the expenses are going to be figuring out how to generate revenue. The old efficiency ratio is if you earn $1 of revenue, how many cents, what percentage of that dollar is being spent to generate that dollar? And so, some institutions, nonprofits are more efficient than others. And again, size has something to do with that. So really then budgeting then says, okay, we want to do our forecast. Here's what it's going to cost us to deliver our to have our company provide this level of service, or our nonprofit. Okay, now how are we going to go raise the money? And then there's lots of things to look at. Is the overall economy going to allow us to do that? Again, even in nonprofit world, what kind of competitors are out there that are going to keep us? If we think we need to generate $1 million in donations and revenue to fund our nonprofit, okay, well, where are we going to go? What kind of repeat donors do we have? What kind of, in business sense, what kind of repeat business do we have? What's our base level of revenue that we can probably count on? And then what are the new strategies we're going to have to take? So, and are those strategies going to cost us money? And then there's the old trade-offs, we can spend the money on this, or we can spend it on that. And the budget needs to involve, people throughout the organization. The process can be tedious. Sometimes we all get too much in the weeds, and we ought to be a little more big picture with it. But the key is what is realistic for expenses that we have to have, and what are our fixed expenses? Go back and say, what's fixed? What do we have to pay? We got a building mortgage. We got rent. We've got whatever else, we got X number of people that we have to pay. That's a fixed. Certain portion of it's fixed. What's variable based on whatever happens with our revenue, and kind of figure that out, and then go from there and put it on paper and talk about it and beat it to death and get it as realistic as you can. And remember, it's a game plan. It may or may not come to fruition, this budget.
Yeah, that's great. Thank you for that. Hey, Mark, I appreciate your time. Before we wrap up this evening, let me just ask you a question about nonprofits and their, banking relationship. I'm sure for the larger ones, I know my nonprofit, I don't know if we ever had like a line of credit, but I think, some nonprofits do, based on the strength of their balance sheet and their cash flow and so forth like that. I know right now with, there's, I feel like Rip Van Winkle to an extent, the fact that realizing, today there's all kinds of ways that, electronically to deposit checks, to get them to the bank faster, to ACH payments, or, things of that nature that help with, with cash management. Now putting on your banker hat and understanding the context of nonprofits, what do you think it's important in terms of that banking relationship, between nonprofit leaders and the financial institution?
Well, that on both sides of the ledger, the banker and the nonprofit, it starts with trust. I think where's a trusted financial institution that has a reputation for doing what they say and saying, here's what we're going to do, and they do it. I think for nonprofits, it's important to get engaged with a bank that cares about the community. Not every bank engages in community involvement. And I think it's important for a nonprofit to find those financial institutions, and every community will have multiple ones, but not every financial institution gets engaged with nonprofit support themselves. So, I think it's always been better for a nonprofit to be part of a banking with a bank that gives back to the community and stays engaged with nonprofits. One, they're going to understand what you're trying to do better. You might end up with a good donor. You might end up with some good board members. There's a relationship that can be built, that one and one, it becomes three. And I think that's really important. So the nonprofit needs to think seriously. Don't just open the account down with the bank on the corner. Might be fine, but it would make sense and help, and use the board members to help you with that. So here's Bank A and Bank B. Bank A is maybe a smaller bank, but their people are involved, and they're volunteering, and the bank is given money, versus Bank B might be a bigger bank that with more resources, but they don't support nonprofits, at least on a local basis. It happens everywhere in the country. So I think that's important. Where can I have a relationship? And two, then communication. Find that person, find your champion in the bank that will be your champion when you really need them to help with issues that may come up with the accounts, or to figure out how to extend credit. And then three, bank with a bank that does provide some of the more electronic, technically savvy services that can, one, make your life easier and save you money. And I think about some organizations. I know banks that our bank, we were very much there. One of our things is our job is make your job easier. I mean, we got to be helpful. We got to be easy. We got to be professional. And so it's nothing more simple than that. Is that there's somebody to be your advocate, and somebody to help you when you need it, when there's a mistake, or when there's maybe the nonprofit's got a cash flow problem. You say, we got to borrow $50,000. We got payroll to meet. We got bills to pay. We know that this gift is coming in. We feel comfortable with it. And the bank says, yeah, we understand. We'll extend you some credit. That's a relationship. Maybe the numbers don't the nonprofit might not deserve it based on the numbers only, but based on relationships. Okay, I know the people, I trust them. I know they're going to do what they say they're going to do at the nonprofit. They're going to be able to raise this money, and then you have a relationship, and it could last for decades.
Yeah, boy, that's great. Well, thank you for those comments and observations that will help set the stage moving forward in terms of the importance of a nonprofit's relationship with their local bank. Like you say, I think it's easy for nonprofits, like you say, just to say, well, this bank is close by. It's convenient for us to, drop off money or to handle, accounts, and they don't take into consideration some of that, the fact that bank is more than just a place to put your money and to process your checks or to help you pay your bills, that it needs to go beyond that in terms of the resources they have to, to offer maybe even some counsel and guidance they can provide. And if it's a bank that really cares about the community, boy, that could be, that's a valuable asset in terms of that relationship. So
Yeah, you want to, I think as a nonprofit, you want to certainly be banking at a place that knows you're there and cares that you're banking with them,
yeah,
because it can lead to a lot of benefits for the nonprofit that initially maybe the executive director or the board never thought would happen with the bank. New board members, again, financial support, advocacy, the ability to help grow the nonprofit just by virtue of being associated with a certain bank.
yeah, that's great. Well, Mark, you are, certainly have been a great asset for our class, today. We appreciate your time and expertise and willingness to share with us. God bless.
Great to be with you. God bless you, Ken. Thank you for the opportunity.